You've talked about it from three perspectives: the industry, the economy, and ultimately going forward from here for the stocks as well. Walk us through the three.
Yeah, I think the industry is a lot like what's been happening across corporate America, which is it's all centered around the COVID and the COVID policy and the policies to defeat COVID. So the hangover for the banking industry was we had a 5.25% interest rate move in 16 months, which is the most in 40 years. And also, just to remind you, is deposits typically grow 5% a year. They grew 38% in the early days of COVID. So the industry is dealing with the unwinding of all this. That means that the industry has had negative operating leverage since its balance sheets have been resetting. There's been no revenue growth in the banking industry. That is going to change, we believe, in June. We believe that we will finally reset the balance sheets. We'll be moving forward if the Fed does, in fact, cut rates. We've got two cuts in our model for the second half of the year. So that will be the first thing. The second thing is we just had earnings reports out, and the stocks rallied 35% from the end of October into the end of the year. The reason for that was it took the worst case off the table. A lot of investors still felt like the worst case scenario was possible. There were lots of questions I was getting from clients about, is this the global financial crisis again? I think we've demonstrated it's not that. And so the industry has survived, is about to re-engage and start to grow again, which we think will start in June. And then the other thing is you talked about the stocks. A lot of talk about how stocks are in the high teens PE ratio and are expensive. Well, not banks and not a lot of small cap banks, that's for sure. They typically trade around 9 times earnings. Some of them have very big dividend yields that they're going to increase. Most of these companies will be buying back stock by the end of the year. And so really, if you were to summarize what we're talking to clients about, 2024 exit velocity. That is a theme that's being talked about a lot, which is we think we'll have an industry that's growing revenues again, slowly. We'll have banks that are raising dividends. We'll have buybacks coming. And if we get a soft landing, that is the Goldilocks scenario. And then we could talk a little bit about credit quality because that's what derails it all.